Hello everybody, in this video I'm going to be taking a look at the MasterCard stock and their company, and I'm going to give my opinion on if I think it is a strong investment right now. The very first thing I wanted to take a look at is their growth in the last 5 years. Their stock price has increased 250% in the last 5 years, which is extremely impressive compared to some other huge tech companies like Google and Facebook. And as you might be able to notice, MasterCard is pretty low volatility stock. In the last 5 years, there's not too many huge increases or decreases. As you can see at the beginning of January, it fell quite a bit with the whole market, and then it's been doing extremely well since then, as you can see at the end of that chart there. But tech companies, big and small, tend to be extremely volatile, so it's really nice to be able to invest in a tech company that is not extremely volatile like MasterCard. Next, I wanted to touch on 3 big points from an analyst at Morningstar who gave MasterCard a buy rating. The first big point is that there's still tons of growth for electronic payments. 30, 40 years ago, the vast majority of payments were in cash because that's all the opportunities most blue-collar workers had. But now, pretty much everyone is using electronic payments, and now in more markets around the world, people are becoming a lot more industrialized and having more access to online payments. And as MasterCard is expanding into those markets, there's a lot of opportunity there for huge growth. And then I wanted to just touch very, very quickly on the MasterCard business model. MasterCard is actually not a bank themselves, but they get a tiny transaction fee whenever a MasterCard card is used through a bank for acting as a mediator between the vendor and the bank. And then back to the 3 points. The second point is that management is appropriately focused on long-term growth opportunities and not near-term margins. And even though they are doing extremely well on near-term margins, they're expanding into a lot of different booming global economies in Central America and in Asia. So they're spending a lot of money getting into those economies so that they can have huge long-term growth, which is extremely important for their business and business model for many years to come. And then that third point is that MasterCard has been outperforming Visa in terms of growth. It's smaller in size, and some leveling in market share between the two could maintain this trend. So MasterCard and Visa have both pretty much dominated this market in the United States. So to continue huge growth, they're going to have to start expanding into new markets around the world. And I think MasterCard is really capitalizing a lot better on that than Visa is, which is why we're seeing that better growth in revenue and earnings. And then from the same analysts at Morningstar, here's a sell rating. And I actually think these sell rating bullets are kind of silly. UnionPay provides an example of how governments could favor local networks. Have you ever heard of a local network that does the exact same thing as Visa or MasterCard? I know I haven't. I don't know the exact numbers, but I'm pretty sure they take a tiny percentage of the market share in the United States. And then in China, they have a huge part of the market share, and Visa and MasterCard are hardly even a factor. But in markets throughout the world, Visa and MasterCard are expanding rapidly. And in those new markets, the governments could favor local networks. But if that's the case and MasterCard and Visa can't get involved in those networks, then they will just expand to different countries throughout the world. There's just so many different markets for them to capitalize on. And then the next bullet is that these two companies basically together run a monopoly. Their only competitors are each other, meaning Visa and MasterCard only have each other as competitors in the United States. And they've paid huge fines as a result of this in the past. And this can almost be seen as a strength, not the fines, but that these two companies basically have a monopoly. They're not having to compete with tons of different people for these transaction fees, and therefore they're able to maintain really good profits. Now, going back to Yahoo Finance, I just wanted to touch on a couple points here. The market cap of MasterCard as of today is $270 billion, and I could definitely see this being a trillion dollar market cap company in the next 8 or 9 years, unless there's some kind of huge global recession happening, and definitely in the next 10 years, especially with all of the different markets that MasterCard is expanding into. I think they're going to be able to rapidly increase growth as they have in the past 5 years. And then they also have a 0.51% dividend, which is pretty small. Only a $1.32 dividend is not too much to get excited about, but I think they're going to increase that from year to year, especially as growth starts to slow down just a little bit. And then taking a look at MasterCard's revenue and earnings, they're very steadily increasing revenue from year to year. And then with earnings, they hit a little bit of trouble in 2017, but other than that, doing extremely well, and revenue and earnings are both on track to do extremely well in 2019 as well. It would be really hard to make a stock video on MasterCard without talking about Visa, so really quickly here, you can see that Visa's stock price has increased about 226% in the last 5 years, and then MasterCard has increased just over 240% in the last 5 years, so MasterCard doing a little bit stronger there with their stock price growth. And then here is Visa's revenue and earnings. You may notice right off the bat that Visa has stronger revenue and earnings, but if you look at it a little bit closer, you can see that from year to year, MasterCard does have stronger growth, which is why I think MasterCard is probably the better investment. Visa right now definitely is the bigger market cap company and has a lot more loose cash sitting around, which is definitely a huge strength. But MasterCard is doing a lot more to expand into new markets, which I think is an even bigger strength. And if MasterCard has a lot more growth, that makes it a better investment in my personal opinion. Alright guys, check out my channel for some other brief stock analysis videos I've done, and subscribe for more content if you enjoyed this video. Thank you so much for watching.